Hello and welcome to Wall Street Wire News. Today I am joined by Raoul Pal, CEO and founder of RealVision. He's also a former hedge fund manager and the man who predicted the 2008 financial crisis. Raoul, thanks for taking the time to join me today.
It's great to be here.
Now, I'd love to hear all about RealVision in just a bit, but I know probably the thing people want to know most about is you're very high on crypto. You write a lot about it, You talk a lot about it. And I think I want to get this question to you. What do you think people are leaving behind in the crypto space? I think some people may have felt like the boat has sort of gone out to sea when you see Bitcoin going to the moon and that sort of thing. What are people leaving behind if they don't get in on this?
If they don't get in on it, they're leaving behind at a top level the biggest revolution that we've seen in the internet and money and the mix of those two combined that we will ever see in our lifetimes. This is actually a revolution in technology and a new way of doing things. So it's not just an investment, it's actually a really broad reaching thing. And that's Bitcoin plus Ethereum and all the other parts of this digital asset network. But in terms of price, if we look at the previous cycles after they halved the supply of Bitcoin, called the halving cycle, happens every few years and it's predictable and forecastable, the price tends to go up 10, 20, 50x. And it would suggest that the price still has maybe another 400% to go, maybe even more this year. Right? There's no asset that looks like this. Sure, you can speculate in options in gaming stocks or whatever it may be,
Yeah.
but nothing as a trillion-dollar asset class has this kind of upside. So that's the potential that's there. So even if you think, well, what happens if it falls 50%? So 50% is your downside, and your upside is 400%.
And you talked about in terms of changing money. Is this a threat to the US dollar, or will this remain sort of two different things in different universes?
In a longer term, in a 20-year horizon, yes, it is a threat to the dollar. But nobody wants their dollar to go up and down 5% a day, which is what Bitcoin does.
Yeah.
It's not stable. It's a store of value. It's more like gold right now. And its very existence caused the central banks, like the Federal Reserve, to set up their own versions of digital currencies. So it all starts slotting into this new digital world. So they understand that it's there, that people want to use it, people want to save in it, make investments, but they also want to make sure that it exists as part of the system that is already in place, because they want your taxes, obviously.
Yeah. Now, as you say, I mean, as something is appreciating in value, why would I want to spend it, right? I might want to just hold on to it and let it to keep accumulating, right? So is there's something probably out there coming in the next couple of years that we don't even that we don't know about, or do you have your eye on maybe something maybe that's the Bitcoin of 2013 that might be used, or maybe the next big asset, or something that could actually be used as money?
So look, Bitcoin is one thing, which might be the store of value that might turn to money. But there's a whole world of digital assets out there. And many people watching this have seen everything from these digital pieces of art called non-fungible tokens. One of those sold today for $69 million. That's one thing. There's platforms like Ethereum where people are building the future of the Internet of Value.
Mm-hmm.
These things have real value. There are also other protocols, tokens, platforms that let all of these different things speak to each other. Like you and I don't know what computer you're on. I don't know what internet provider you're on. And we don't care, right?
Right.
Because it's called interoperability. That whole layer is going to come too. So we're not worrying about Bitcoin. We won't want to invest in it. But if I want to send you money, I don't care how it happens. Or if you want to charge for this video and make it instantly streaming, it may happen over Ethereum, but nobody cares. You care because you get the money at the end of it.
Right.
So there is a huge world of this that's all coming. So I'm a big fan of Ethereum, and I'm a big fan of a lot of these other projects. Problem is when you go further out on the risk curve, you don't know which ones are going to really survive and get the network effects.
Yeah.
But Ethereum clearly has got the network effect. Bitcoin has. This whole space now is 1.7 trillion. If we compare it to the global equity market or global bond market, those are kind of 300 or 400 trillion in size. So you can see how big this can actually get over the next, 10, 20 years. It's
And that
huge.
makes me think, do I even need to understand how this all works necessarily? I mean, I should, as opposed to like, well, I don't really get the blockchain. This doesn't really make sense to me. Raul's talking about interoperability and connecting computers and all that. I don't really quite get how that works. It might be a bit technical, but if it makes me money, that's that's certainly a good thing, right?
Yeah, and I think obviously you don't do things blindly. You have to have
Yeah,
a basic understanding of what it is. But none of us understand the technology behind Google, but we own Google shares
right.
because we understand where it's going or what it represents as a business. So if you just think in those terms, what does this digital asset space mean? Well, it means a potential future of the internet of money and the internet of value. If you think, yeah, I get that, this could be really huge, then you buy a few of these tokens and hold on to them. The hard thing is if you think you're going to be a trader, you're going to be that new wizard who buys and sells this stuff, you will end up buying and selling your way into poverty. The best thing to do is buy and hold it.
Makes sense. Now, I've seen a prediction from you. I believe this was from a couple of months ago. Bitcoin could hit 1 million by I think it was 2025. Are you still on that?
Yeah, I mean, that's basically following the trend line, the logarithmic trend line that it's been following since its inception. So I'm not saying anything racy. It just sounds like a big number.
Yeah.
But it would make sense. Now, we will have a big down cycle before we get there as well. And that's normal too. Those are some of the features of the Bitcoin price cycle. It tends to explode up, it then comes down a lot, and then it starts building again. And that next cycle should get to $1 million, maybe more. Who knows?
A little bit of a side point here. You mentioned gaming stocks. I'm thinking particularly of GameStop. But just a quick thing is that seemed to be a sort of, I guess, democratization a little bit of investing of a bunch of little guys coming together. Is that sort of like what we're seeing in this digital revolution? Is that sort of in the same frame, the same
Well,
vein?
what's amazing is imagine being able to own a share of the internet, not Google, but the internet, or a share of the monetary system. That's what this is. That's how democratizing it is. So it's not like you can own a stock and doesn't that make me feel free and liberated and democratized? No, this is owning a stake of the future. It's something much bigger. It's the most democratic investment I think we've ever had. And it's extraordinary because also people might go, but I can't afford to spend $50,000 on Bitcoin.
Right.
The magic is it goes down to 8 decimal places. So you can put in $10 and you can save $10 every month, or you can save $1,000 every month, or you can buy a whole Bitcoin. So that makes it also democratic because shares, you can't do that. Fractional shares, they're coming. And some of the platforms like Robinhood have fractional shares, but this by definition is fractional. So it makes it affordable to even the poorest person.
Fascinating. Now, I want to move to the more traditional, the stodgy stock market. That's old school, I guess, but it still is very important. Now, I'm thinking about sort of the Dow. It gets a little bit of bumps in the road. There's certainly been rising inflation fears, but then it just seems to creep back up to all-time highs. And I think there's sort of two, just to make it really simple, there's sort of two camps that say, well, as long as the Fed is printing money, this thing is going to go up, up and away. And then there's another side saying, no, this is not going to end well with all this central bank intervention, leading to the question, is there a bubble in the stock market, Raoul?
Yes and no. Yes, because the speculative activity is almost the highest on record, or if not the highest on record, above and beyond what we saw in 2000 in the dot-com bubble. So there's too many people buying options, too many people punting stocks that are valueless, hedge funds with too much exposure, mutual funds with too little cash. It's all in the market. Everyone's all in. So is there the potential for this whole thing to have a sharp, nasty unwind?
Mhm.
Yes. But over time, the stock market is reflecting something else, something much more important, which is the rise of central banks and their balance sheets, i.e. the printing of money. Many people talk about, well, it's inflationary, yet CPI doesn't go up a lot.
Right.
But people feel poorer. What's going on? Well, the magic is when you move away from using the US dollar as the denominator of something and use the central bank balance sheet, where there's all this excessive supply. So if you divide the S&P 500 by the Fed's balance sheet, what happened is, and this feels like it actually is in reality for all of us, the stock market never really recovered from 2008. It trades in a sideways range, little booms, little busts. And what it's basically saying is almost all of the growth in the stock market is the central bank balance sheet.
Yeah.
The same applies to gold. It's kind of offsets the central bank balance sheet. The same applies to many other things. The only thing it doesn't apply to is Bitcoin. Bitcoin is the only asset that has protected people from the loss of global purchasing power of fiat currencies that have been printed to excess. So that means that if the central banks continue, the price denominator makes it look like the market's rising. So for people who've seen that the Venezuelan stock market once went up, thousands of percent.
Yeah.
But once you take it away from being in Venezuelan bolivars and put it in US dollars, it had gone down. It's the same thing. It's what your denominator is. So that is a bubble in central banking and not a bubble in the stock market. There is a short-term bubble in the stock market.
And then that would mean that, well, I guess if we don't want a market crash, then central banks do have to keep printing. How do they unwind this?
And there is the problem. So there is no unwind. So there's their version of the unwind, which is, okay, if we can just keep going and hold this together, then maybe we can get inflation slightly higher, and over time, the value of this debt will disappear. Like somebody's parents who had a mortgage in 1970, the mortgage suddenly looks laughable now because inflation got rid of it. So they're hoping for that, hoping they can raise some taxes and hoping they can keep printing some more money to make the ability to pay all this debt back easier. That's their bet. The world is taking another bet, and that's we can build a parallel financial universe at the same time, and we can choose to opt out. And that's what's going on in the digital asset space, and that's what's going on in Bitcoin. It's a whole parallel financial system with borrowing, lending, clearing, custody, transaction, everything is all built on this new universe. And slowly, people are going to migrate across.
That's fascinating because you often don't get an exit ramp in life, and you're telling me there actually is one. That's a great point. You mentioned inflation a little bit as not being too big of a deal, not in terms of central bank printing, but we've seen the rise of bond yields going up, and that has been spooking the market. How big of a threat is inflation to savers right now?
So I don't think inflation is a threat at all, and the reason being is the population's too old. There's too many people because you've got the millennial group as well that are enormous, all competing for wages, which stops wages going up, which means you can't create price spirals to the upside like the 70s and early 80s. Technology lowers the cost of everything. Mm-hmm. Globalization means you compete against cheaper workers and cheaper goods. So those things and the amount of debt in the system is deflationary by nature, because as rates go lower, people add more debt to cover the cash flows that they're missing. Mm. So all of those things make inflation very hard to go up for an extended period of time. So the biggest problem of that structure is wages don't rise. So if you put up the price of oil that's happening right now and the price of other commodities, guess what? You can spend less in a restaurant or a bar because it's taken away from your savings. So actually these mini cycles of inflation are actually deflationary in nature because you pull back on consumption. So I don't think it's a problem for savers, but the different type of inflation, the loss of purchasing power over time from central banks is meaningful. So how is that represented? So if you look at the real wages, so wages adjusted for inflation, and then look at the real price of the S&P 500, you can basically buy a small fraction of the S&P for the same dollar than you could in the past.
Right.
The same is true of gold and real estate and now bonds. So basically, anybody now as a saver can buy nothing with their money. And everybody who's earning the median income can't buy assets. So it's making people poorer. Because the people who get richer are the people who can buy the assets that go up in value. That's the only way of generating extra wealth apart from your career and your output per hour going up. Bitcoin changes that dynamic too, because everybody can participate in the thing that makes everybody rich. You know, we can all see art trading at, you know, $100 million, right? That's not for you and I. We'd never be able to buy that stuff.
Right.
But in the digital world, you can. So you can make the same kind of returns the rich guys make. It's a huge shift.
So this is sort of this just solves a lot of problems. I mean, wages, that's something that, you know, you've been hearing that for, I don't know how long, at least the last decade, of certainly rising inequality and all that. How do we solve this problem? How do we get people to earn enough to live in this more and more expensive world? And then that's again another path. That is a fascinating. I haven't quite heard it put that way. So I find that fascinating. Now, you mentioned, I do want to ask you this directly. I suspect I know the answer to this, given your sense of there not being a threat to inflation and certainly the rise of cryptocurrencies. Does it make any sense anymore, Raoul, to own gold and silver?
I'd like to say yes, but my heart says no. I think it'll underperform Bitcoin. There will probably be a period of time where Bitcoin, you know, has its bear cycle and goes down, and gold maybe goes down less or holds up better. So there are points where it's worth owning, but I don't think it solves the problem. And quite in the same way that Bitcoin solves the problem.
Interesting.
So I sold all my gold about 9 months ago.
Oh, really?
Yeah.
So this is not, yeah. So you're saying ideally it would, but this is just not the world we're living in now.
Yeah.
Fascinating. Now you've suffered my questions. I want to give you a chance to talk about all the work you do. Tell me about Global Macro Investor, Raoul.
So that's my flagship research product that's read by the world's most famous hedge fund managers, sovereign wealth funds, pension funds, asset allocators, governments. I've been writing that for 16 years. So I left the hedge fund industry, where I was running a large global macro hedge fund in Europe, and I decided to opt out of the rat race, move to the Mediterranean coast of Spain, and write research, because I was one of the few people who'd grown up in the hedge fund industry, so I could write as a hedge fund manager with authenticity about how to make investments. And so that's been my flagship product. You know, it's like 130 pages every month. It's huge.
Oh, wow.
Which I write myself. And so, yeah, that's been the core of what I did. And out of that came RealVision, which is the financial media company that I was the co-founder of, which was basically the aim is, so if you think of Global Macro Investor being highly elitist, hugely expensive, read by the kind of inner circle of the inner circle. And I kind of went, yeah, forget it. Let's build something for everybody. And that's what RealVision is. The power of video, like you and I are talking. We were, very early adopters of the power of video, not short form content, but long form, intelligent analysis. But as opposed to having TV anchors, we got the world's most famous hedge fund managers to come and talk to us. So we just democratized the entire financial information. So we do that. We have written research, we have video content, we have tiered memberships, we have free YouTube channels, free podcasts. We have a footprint everywhere to drive that information out to as many people as possible and empower them to make better investment choices in their lives.
Yeah, there is a mountain of very, very, very valuable content there. You also have a specific crypto section there on RealVision. What's that all about?
Well, since the very first video we ever shot on RealVision, we talked about Bitcoin, and that's 2014. And we said, listen, there's two parallel paths. There's the financial economy and there's this crypto stuff. And one day it's all going to meet in the middle. And this recession was that meeting point. So I knew it was coming. So in September last year, we launched RealVision Crypto because I knew that everybody has to get up to speed. And the crypto space was driven by retail investors, driven by tribal narratives, lots of infighting. And I'm like, no, this is too important, too big an opportunity for everybody. We need to create the unbiased, in-depth analysis in the space that everybody can get up to speed on the magnitude of this opportunity.
And there's also a section.
And that's free, by the way. So that's,
oh, sorry.
You can sign up for that just with an email, realvisioncrypto.com, and it's free. So it's a great way. And again, we got sponsors to sponsor it, purposely because we wanted to reach as many people as possible, because I'm so passionate about how vital and important this is in the financial economy.
Excellent. And you also have another thing called Macro Insiders on RealVision. What's that about?
That is a kind of baby version of Global Macro Investor.
Great.
Again, because it's too expensive for ordinary people, I wanted to create one that was relatively affordable. That's part of the RealVision Pro tier. There's myself and another guy who get all of our research. We've also got a whole trading education business we've just bought that's about to be put into that. So it's going to educate people how to trade with a full course by one of the best people in the world doing it, and this kind of world-class research. We've got 3 membership tiers: RealVision Essential, which is the video content with some education; RealVision Plus, which is even more education and more access, where you can have live Q&A with some of these really famous investors; and RealVision Pro, which is the people who really want to get to grips with how to trade and invest.
Great. I'm sure everyone will want to take an interest in seeing your great work. We're going to have a link right down below for you to click on to go right to it. Final question, Raoul. If we're to have this conversation in 5 years, what would we be talking about?
We would be talking about 4 things. We would be talking about the rise of these big protocols, Bitcoin, Ethereum, and how big they are now. And is this still going to continue? And I'll be saying, yes, it is.
Yeah, I'll be, Raoul, did I miss the boat?
Yeah. And we will have that conversation.
Yeah.
Then we will be talking about how gigantic the virtual and gaming worlds are becoming, and why they are leading this whole crypto blockchain thing. That's a huge thing that's coming. The other thing is we will be talking about what community tokens we want to own. Do you own the token community for the football team you support, or for the artists that you support, or the business that you're involved in? Community tokens where you share, again, democratizing the value accretion of the community, not giving it to Facebook and Google, but keeping it within the community and within the creator. That's coming. We will also be talking about the rise of these decentralized banks, and how isn't it crazy that we don't have to go to the bank anymore, and that our money transfer is instantaneous. We'll be talking about the central banks having launched their digital currencies, and how I can send you money instantaneously. And do you remember those days when it used to take 5 days for me to send something from the Cayman Islands to you? Mm-hmm. That's all coming, and more. We don't even know where this space is going. There are more developers now working in this space on new projects than probably in any single other space in the entire technology world. It's gigantic.
Well, that sounds like a very interesting world to be living in. We'll have to book this and come back in 5 years and see where we are. Raoul,
absolutely.
Absolutely fascinating conversation. I encourage everyone to check out RealVision. Just great stuff. Really appreciate, I respect the work you're doing, and I really enjoyed this conversation. I'm sure everyone else did as well. Thank you so much for joining us.
Yeah, thanks so much. And if anybody wants to find me, you can find me on Twitter at Raoul, Raoul GMI. You can hunt me down on LinkedIn or go to the RealVision website.
Great. Thank you all for watching us, and have a great trading day.